Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Morning everybody. So in the gold market, it's a few things that we could do actually. So we can see in the daily chart markets overextended. From the long-term point of view, week by week we already talked about this in the recent couple of years, and buy and hold is our major strategy because our recent weekly report has shown the new issues and factors that could make overall situation so explosive that recent upward action to the 33 on the gold, it might be seemed like just baby tricks compared to what we really could get. Long-term target based on the patterns that we have right now in place stands around 4,000, and I think that in the perspective of a few months it easily could be reached. So now traders even find the reasons to suggest that it might be action to the 6,000s, 12,000s. It's quite possible based on the historical scale and based on the actually ongoing processes that we see currently in the market. And by taking a look at the other markets, it is not surprising that actually we could get it. So for instance, if you take a look at the dollar index, you could see big downside ABC with the breakout of the major 100 level. Next target will be 95 degrees approximately on the euro currency for 120 area, and that will be a really significant drop of the dollar, especially if you consider that the drop actually stands with the acceleration compared to the first leg. It potentially means that dollar could even go lower. And 10-year bonds. On the 10-year bonds, it's a very interesting monthly chart. I already talked about this in today's euro video, but I also will show you here. Let's take a look after the upward action, the starting problems in the United States and rising the yields, inflation and so on. So you can see that market turns in a consolidation that takes the shape of the triangle. Currently, it is on average stays around 4.5 area. This market is quoting. But as you understand, any triangle has the bullish sign here for yields, which means the continuation, and the nearest resistance that stands in the market is all-time 30% resistance level. This is 625. You could imagine what will happen if story will jump to the 625. And this jump hardly will mean for investors the rising of the attractiveness of the investments in the United States dollar. It's not an indicator. The high yield is already not an indicator of attractiveness, but more an indicator of the rising of the credit risks and dropping of the confidence. So it's just kind of the new premium for the risk. If just half a year ago, rising of the yield was treated by all investors as the rising attractiveness and everybody starts buying the assets from the United States, currently it's more like the toxic sign that rising of the yields tells almost in the same way how it treats junk bonds, high yield bonds. When high yield bonds start rising the spreads over the AAA bonds, it is always an indicator of the rising of the risk. The situation is becoming tougher. So currently the yield of the United States Treasury treats it the same way. And it's becoming common with the overall bond market. So as you understand, long term, this will be really supportive for the gold market. In the shorter term, we do not have big options. So, as I said, a few things that we could do currently. Market stands overextended to the upside. The major reason for that, although broadcast media tells that it's probably because of the Donald Trump attacks Jerome Powell, he would like to fire it. It brings instability. It brings a drop of the confidence, nervousness. But guys, this story was known already on Friday, and I haven't seen on Friday big rally. So when this has happened, its market already was rising. It's not because of this news. It's not because of the Pope death, definitely. I suspect, as I already talked about this as well, that this is just the widening of the stream of the money that of the traders that joins the overall narrative to of the current business conditions. So more and more traders starts becoming worried. They understand that something's going on. They understand that the strength of the United States dollar is deteriorating. Overall market conditions and global finances are deteriorating, and they need protection. And that just more and more people start buying the gold. That's all. That's just an increase of the demand. I do not see this particular trigger factor for that. So in the shorter term, on the fall time chart, the market shows very small retracements. Currently, we can't use some common way how we're trading, taking some considering some expanded patterns, watching for more or less deep pullbacks, waiting for the market will form something like head and shoulders, butterfly, triple twos, or so on. Action is really fast, retracement very small. So that's why we have to diminish the scale of the trading. So we need to take a look right now on the fall time frame chart, on the hourly chart, use the previous top as a potential target, and watch for very small retracements. So based on the fall time frame chart, we have upward action, which seems small compared to all frosting action, but still this is not small. If you calculate number of candles, here's 8 candles or even more to the upside, and even this small stressing thrust is suitable for the short Napoli patterns. That's why obvious trade that we could consider waiting for the harmonic pullback, getting the Brent by the trade, considering attempt to go long around 34.17, 34.19 area. So somewhere like this, 34.20. That's what we have from the fall time frame chart. On the hourly chart, approximately the same story, but you could see the thrust looking a bit more reliable, so it's a bit larger. And here you also could start watching for other patterns. For example, forming here minor double repo could trigger this downward action to the downside. In the current circumstances, guys, we're not calling you to trade the bearish patterns, even on the intraday charts. It's very risky. Of course, we can't forbid you to do this. You could try, but for us, the major purpose is to wait for a pullback, whatever reason it will be triggered, double repo or some other reason. But if we will get the pullback, we'll consider taking the long position based on the patterns that we could get on the fall time frame chart. That's the primary way of thinking. So we're trying to go with the tendency, but not trying to go against it, although the patterns may be also attractive. So that was what we have. Currently, I do not see some really other ability to do something to get great trading on the daily chart. Yes, we have great thrust, but we need something else to trade it. So we need some retracement or something appearing on some pattern, but currently we don't have anything. So thrust is great, but it's useless. Something on the fall time frame chart we could get based on this thrust on the hourly chart. That's probably all it's possible to discuss right now.